Welcome to this mock test. This mock test is called Lindiwe. Now, before I continue, please remember that you should attempt this question yourself first and mark yourself to the suggested solution. The point behind this tutorial is to discuss some of the problematic areas and to work through the question and do a little bit of revision basically. So you should attempt it yourself first to see how well you know the work before working through this. Now, you'll see this notice at the start of this question. I have provided you with tax tables and tax rates which you should use for this question. They are not the correct rates. These are tax tables and tax rates which I made up myself. The tax rates and the tax tables, they all work in the same way that the real ones work. Please remember, in the exams you will obviously have to use the relevant tax rates and tax tables, which can be found in either the latest SAICA student handbook, but they'll also provide you with a copy of them in the exam. Use what has been given to you in the tests and the exams. Okay, you should not memorize the rates and amounts in any case because they are constantly updated, and these tax rates and tax tables do work in exactly the same way. So let's start with the question. This question consists of two related parts. Pay attention to that, whether they're related or unrelated. If they're unrelated, it means you can ignore, if there's part A and part B, you can ignore part A when looking at part B and vice versa. But if they are related, please do look out for whatever the link might be. It might be important, it might not be. Okay, in this case, part A. Lindiwe Molete is 55 years old. She's 55. That means she's younger than 65. So all of those special rebates and things that happen when a person is 65 or older is not applicable to her. 55 years of age, things like severance benefits might be relevant to her. Well, let's see. Lindiwe has been working as a senior architect for PK Designs Limited, an architectural and engineering firm, for 8 years. Lindiwe owns rental property and she is registered as a provisional taxpayer as she receives rental income. Remember, you have to register as a provisional taxpayer if you earn income which is not subject to employees tax. So if it's not remuneration, you basically have to consider being registered as a provisional taxpayer. Information relating to Lindiwe's assessed taxable income for the previous 3 tax years is presented below. Okay, so the assessed taxable income means this is if it's been assessed, it means SARS, you've submitted your tax return to SARS, they've looked at it and they've said what they believe the taxable income to be, and that's what you have to pay tax on. They've assessed you. Right, so they give us for the 2021 year, 2020 and 2019, they tell us the dates which the assessments were received from SARS. Okay, then further information, 2021, the taxable income was 950, included a taxable capital gain of 50,000. Taxable capital gain in 2020 was 920, taxable capital gain of 65,000. Taxable income was assessed as 880,000 in 2019. Now, this type of information, when I read it, I already start thinking that this might have something to do with the basic amount. Okay, that's what it would be for me. Okay, and then we have part B. Details pertaining to Lindiwe's 2022 year of assessment are presented below. The 2022 year of assessment. Now, remember guys, that means that the tax year starts for individuals starts on the 1st of March 2021 and it runs until the end of February, in this case 2022. Okay, so they tell you salary. She earns a salary of 50,000 rands per month. I will make the comment here that that is remuneration. I'm just going to call it REM going forward. Overtime, Lindiwe worked extended hours in November 2021. November 2021 falls in our tax year, and she earned 20,000 rands in overtime. That's also remuneration. Commission, Lindiwe is entitled to commission on the revenue she generates for the firm. during the 2022 year of assessment, Lindiwe became entitled to a commission of 550,000. That's also remuneration. Now, I'm pointing out what remuneration is, and it's something that you should keep in the back of your head, because remuneration is what employees' tax is calculated on. You also use remuneration when you are calculating your Section 11F limits. Okay, now, let's stop also for a second here. Whenever you see the person earning commission, you should think about Section 23M. Section 23M says it applies if a person does not earn mainly commission. So let's already look here. So salary is 50,000 rands a month times 12, 600,000. And overtime is 20,000. So that gives us 620,000. The commission equals 550,000. Now, even before considering overtime, if you compare the 550,000 to the salary, you see that this person earns mainly a salary. So in this case, Section 23M will apply. Now, why is that important? Remember, if Section 23M applies, this taxpayer is limited into what they can claim as a deduction. You can only claim what is allowed in Section 23M. Just things like wear and tear on an asset of use or business. Things like home office expenses, the retirement fund deduction, which is the Section 11F. It's things like legal costs, bad debts, provision for doubtful debts relating to your employment. You can't just deduct things like petrol, for example, fuel, insurance costs in your vehicle, and all those things that you incur. If you earn mainly commission, those things become deductible. So again, guys, please remember to revise Section 23M. Okay, so BMW 330i is the next one. On the 1st of July 2019, so that is the 2020 tax year, PK Designs purchased the BMW for 580,000 rands, including VAT. Could they claim the VAT on that, guys? No, input tax would be denied. And they gave it to Lindiwe to use as a company car. The vehicle was purchased without a maintenance plan. Without a maintenance plan. It's a company car. Now remember already, a company car, we basically take the cost of the vehicle, maybe that's not correct, let's rather call it determined value of the vehicle, times 3.5% or 3.25%. 3.25% if there's a maintenance plan, and in this case there is none, so that's not applicable. So it's 3.5% times the number of months. Okay, this determined value, what is this determined value? It's the cost of the vehicle. But if the employer purchased the asset and only gave it to the employee more than 12 months later, then you have to decrease that. Now, what is important for you to note here, yes, this asset was purchased in 2020 and we are now doing the 2022 year, so 2 years have passed. But this taxpayer got it from the moment that the employer purchased it. So we will not decrease the determined value. We won't take that cost and decrease it. You only increase it if, decrease it again if, for example, on the 1st of July 2019, the employer purchased it, but they gave it to Mr. X, and now a year later, the 1st of July 2020 or later, they give it to Lindiwe for the first time. So they're giving them an old car. Right, in this case, it's not the case. So in terms of the agreement with Lindiwe, she would be responsible for all costs associated with the vehicle except licensing fees. Now, this is just to tell you, remember, when you are calculating this fringe benefit, you can claim license, maintenance, insurance, and fuel. You can claim all of those. This just tells you that license will be out of the picture because you can only claim the ones which you are paying. On the 30th of June 2021, okay, so that's in our 2022 tax year in here. At that time, PK Designs offered to sell the vehicle to Lindiwe for 380,000 rands when the market value of the vehicle was 460,000. So they're going to sell it for 380, market value is 460,000. So that's a fringe benefit. So I would recommend, if this was me in the exam, I would just keep this list of fringe benefits I'm identifying. I'm identifying a company car. I'm identifying an asset at less than value. They say Lindiwe accepted the offer. She paid 260,000 rands in cash, and to fund the balance, she was granted an interest-free loan. Okay, so she should pay 380,000. She only paid 260,000 rands herself for now, and the balance of 120,000 is a loan. So there is in this case, an interest-free loan, they say. Okay, Lindiwe settled 65,000 rands of the loan on the 31st of December, and she made no further payments in respect of the loan during the 2022 year of assessment. Okay, so let's actually quickly do this. So here's the timeline again. Sorry, not 22 Feb, 28 Feb. And guys, please use timelines. I find it works nice to do it visually. So on the 30th of June, they gave her the loan of 120,000. Then they tell you on the 31st of December, she paid 65,000. Right, and she paid nothing else for the rest of the year. So for this period of time over here, the loan is 120,000. And then for the next period, the loan is 55,000. Okay, still an interest-free loan. You will still calculate the interest that should have been paid, the fringe benefit for this entire period. Okay, it remained a condition of work for Lindiwe to be able to travel to clients. She used the BMW for this. What this is trying to tell you, and look out for it, is that this means thus she can claim wear and tear on the vehicle under section 11E. And why is she allowed to claim wear and tear? She's allowed to claim it because section 23M tells you that you may still claim it. Now remember, as long as you're using it in the production of income, you can claim it. Now they tell you, per interpretation note 47, a new vehicle has a useful life of 5 years. Now what's important for you to note here is that this is not a new vehicle. This was purchased on the 1st of July 2019, and she's getting it, you can see, 2 years later. So the useful life of this vehicle for the purpose of section 11E is 3 years. 5 minus 2. Lindiwe maintained an accurate logbook of the kilometers traveled during the 2022 year of assessment. And for Lindiwe, this is super important because if she wants to decrease the fringe benefit value for the company car, she must keep an accurate record. And also, if she wants to claim the wear and tear on this, she must keep a record because she can only claim it on the business kilometers. Okay, so March until June, for that period, it was what? A company car. So Koi company car. July until February was her own car. So what I want you to see is, what I mean by this wear and tear over here, it will be the value of the vehicle over 3 years times July until February is 8 months over 12, so that's for the year, times 13,500 over 18,300. You can only claim it for the business portion. Important. Lindiwe maintained an accurate record of the costs incurred in respect of the vehicle, and they give it to us again. So here's for the company car period, and here's for the own car period. So can she claim these costs during the time that she uses it as her own car? How do you know? She says using it in the production of income, but can she claim it? Immediately you should think about Section 23M again. Does Section 23M allow her to claim the costs? And the answer is no. So those costs that she incurred during this period of time is denied under Section 23M. So if she earned a commission, then she could have, if she earned mainly commission, which is not the case. Okay, tricky. Provident Fund. Lindiwe is a member of PK Design's Provident Fund. She contributes 5,000 rands per month to the Provident Fund. Perfect. Section 11F. Then we've got this rental property. Lindiwe's father passed away during the 2012 year of assessment, and Lindiwe inherited a substantial sum of money from his estate. In 2019, Lindiwe purchased 6 new one-bedroom apartments from a developer. The apartments are on a building that has 30 apartments. So she bought part of a building. How do you know you have to be conscious of that? Because guys, remember when you study things like Section 13.6, which is residential accommodation property, there's apportionments that need to happen if you only only have part of a building. The cost of the 6 apartments was 1,950 including VAT. Can she claim the VAT? I know she's not a VAT vendor, so obviously she can't. But even if she was a VAT vendor, could she claim it? No. Not if it's residential accommodation. She rents out 5 of the apartments for 3,000 rands per month, and she has given the 6th flat to her half-brother to live in free of charge, but he is responsible for all the expenses relating to the flat. So 5 flats, let me show it like this, is used in production of income, and 1 flat not used. Now this 1 flat over here that's not used in the production of income is still a capital asset, and if she sells it, there will be capital gains on it. But can't claim anything, because everything in the Act must be used in the production of income. Used in the production of income can claim costs. Now, will Section 13.6 apply? Section 13.6 applies when? When you own at least 5 units in South Africa. So Section 13.6, yes, it will apply. So Section 13.6 can apply. Now, the moment you see Section 13.6, you have to think about things like low cost residential units. And that's a flat cost does not exceed 350,000. Rental per month does not exceed 1% of cost. Okay. 3 of the tenants were 1 month behind in paying their rental by the end of February, and they only paid it in March. This is a classic thing to see in questions. Will she include that rent in her taxable income? Remember, gross income is on the earlier of receipt or accrual. Okay, for the 2022 year of assessment, Lindiwe incurred the following expenses in respect of the 5 apartments being let. So it's given to you for these 5 apartments. So can she claim costs? Yes. Can she claim levies? Yes. Water and electricity? Yes. Municipal rates? Yes. Maintenance? Yes. There's no capital costs involved there. Okay, and then we have foreign interest. Lindiwe also inherited $35,000 cash deposit in a bank in the USA from her father's estate. So this is foreign currency. If you see foreign currency, you have to think of exchange items. If you have an exchange item, you have to calculate forex gains and losses under section 20, sorry, not section 24J, section 24I. Exchange items are foreign currency, foreign debt, forward exchange contracts, and foreign currency option contracts. Remember, if you have any of those, you have to calculate forex gains and losses. So that's something which I expect some of you might have missed. Lindiwe has not withdrawn any of the capital investment and only withdraws the interest earned each year. During the year of assessment, this bank account yielded interest of $2,000 earned evenly over the year. That's gross income. It's earned evenly over the year. Perfect. The average exchange rate for the year was 14.68. Lindiwe withdrew the foreign interest and paid it into a South African bank account on the 28th of February when the spot rate was 15.02. When the money was withdrawn, a withholding tax of 15% was levied by the US government. So this would be section 6 quat. If asked to calculate tax liability. Remember, if you do your tax calculation, if this was a tax calculation where you go gross income, less exempt income, less deductions, right? You calculate the taxable income. Then you calculate tax per tables. From that you deduct your rebates. Section 6 quat is here. So if they ask you to only calculate taxable income, you won't worry about section 6 quat. And then they give us the spot rate on the 28th of February 2021. That's the previous end of the previous tax year. Now, this would have triggered me also and should have reminded you about section 24I. So, remember, you have to calculate forex gains and losses on realization date and translation date. Translation date is at the end of the tax year, so you will have to calculate this forex gain and loss. Now the question is here, when she calculates this forex gain and loss, is she going to use the spot rate or is she going to use the average exchange rate? Section 25D tells us a natural person has a choice of spot or average. So, what would she use? She would use the one which is most beneficial to her. Okay, and that's it for the reading time. So in the next video, we'll start off the required.